Bitcoin bottom is closer than ever. Now is the exact time to pay attention. What's up, everyone? Welcome to Crypto Capital Venture. Thank you for coming by. Let's jump into the Bitcoin video. There are going to be a lot of people that probably just read the headline, the title of this video, and I'm not exactly sure what it's going to be yet. It'll have a hint, a dash of optimism in it. But it's just because this is the data. This is historically what we've seen happen with Bitcoin. I want to break it down on the charts so simply. And we've been tracking it for years. All of these same data points. They continue to be consistent for us and continue to lay the groundwork so that we can plan what we're going to do in terms of our portfolio, in terms of our general crypto plan. And for full context to what we're about to talk about, here's a quick clip from a video from December 9th, 2021, towards the end of last year. Check it out. Fibonacci 786 to 618 range right here, and it's in that $28,000 to $17,000 range, and in that whole area is accumulation zone on the heavy. This was going into the last part of last year into this year. We were talking about downside in regards to a historically, based on Bitcoin cycles, profoundly consistent area in terms of what Bitcoin does. And Bitcoin at the time when I recorded that video was, what was it? $48,000. And now here we are, Bitcoin's $34,000. We're in May. This was December of last year. And I'm not sitting here saying I've predicted this. The reason I chart that data then is to be prepared that the consistency of these cycles of Bitcoin revisiting these Fibonacci's, just be prepared that it happens again. And when it happens, it takes a while for it to play out. There's so much patience involved. There's so much mixed market sentiment being thrown at us in every direction. And that's why I'm always trying to track upside and downside targets, upside and downside scenarios, bullish and bearish scenarios based on even global events and what's happening in this world. We just want to be prepared because none of us know at the end of the day what is going to happen next. But if we zoom out on this Bitcoin chart, the data is clear and it's consistent. It's not a ton of data that we have going back for Bitcoin, but it's there, right? So here's a Fibonacci basically in this general vicinity going back to the last bear market low that we were tracking. And it's basically the bear market low of 2014, bull market high 2017, down to a Fibonacci, right? And we're using that data. And here's also a similar Fibonacci back here. This was the bear market low. Bitcoin broke into and below that back then, 2014 to 15, I should say. Here's Bitcoin breaking into it, 2018. And so we're tracking just a similar Fibonacci. It's the same exact type of Fibonacci for Bitcoin. And this is what we were looking at in that video. 28,000 down to around $17,000. The 200-week moving average confluent perfectly in the middle of that channel right now. Now, as we sit here on the weekly chart, is it going to happen again? I think that's the question on all of our minds. And so I just start opening up new indicators. And by the way, in that video, I basically said that we haven't had that bearish confirmation just yet. We're not convinced that this is going to happen again. But the bearish confirmation that we were really looking for was a 20-week moving average crossing below the 50-week moving average, and that happened in March, right? So it took from December when I did that video to March to even get that, and Bitcoin has consistently seen resistance below that area. It's looking very, very, I don't want to use the word likely, but it's looking very, very possible that Bitcoin could fall, could capitulate into this area because we have another data point on top of these things. And this isn't to sound bearish, everybody. This is it. This is opportunity. This is optimism at its finest, right? In terms of Bitcoin in a downtrend. Because when we're entering this environment where Bitcoin might be getting ready to capitulate, might be getting ready to really just weed out the weak holders, and people are going to just come in and accumulate like crazy for a really strong bottom on the macro charts, when we're entering that area on these charts, that's bullish. This is where the opportunity is, where all of that fear is, where that capitulation is the opportunity. So if we're looking at this other indicator and we're going over here and we're saying, all right, man, these Fibonacci's really played out. And just to give you an idea, right? Let's take this 2000, what is it? It's January 2015 to 2017 bull market high. This, I drew it wrong. I was just guessing, but this is the Fibonacci that Bitcoin fell to and bottomed below at the 200-week moving average, just to give you an idea of what that looks like. Because we're talking about the same type of Fibonacci now at a higher low area with that 200 moving average now not below the 786 around 17,000, but actually in between, right? So a more likely bottom for Bitcoin would be around $22,000 at this point. We're at $34,000. It's so incredibly possible that will happen. But again, going to this indicator, if we're looking at all of this data and we're saying, okay, well, what's momentum of Bitcoin looking like? We have this green line on this RSI where kind of Bitcoin consolidates around, it wraps around before either escaping to the upside or to the downside for capitulation. And this is Bitcoin falling to capitulation in that last bear market. You can just see it there. And Bitcoin right now kind of really testing this previous lower, or not lower high, but previous low in January on this RSI. And if this just falls, this is the environment we're looking for Bitcoin to bottom. And we're getting close to the scenario. We're no longer, definitely not in an overbought area. We're not even approaching overbought area for some type of rally, right? Or a lower high on the RSI. We're actually falling right below, getting ready to fall below support on the RSI. And you go back all the way even to the 2015 bear market low. This was what Bitcoin did. It fell and capitulated into oversold, and it was breaking a previous swing low that it saw really months earlier. And we're in such a similar area that we were then in terms of all technical indicators on Bitcoin charts. I know a lot of people are bullish with on-chain data, and that's fine. Bitcoin is bullish. It really does lend to this. All the on-chain metrics lends to the bullishness of Bitcoin on the macro charts, to the bullishness of Bitcoin as the S&P 500 finds its own bottom and starts to recover and starts to see uptrend. All of those things, they're going to lend to the power of an explosive move for Bitcoin. But you can't ignore the cycles and the data that we have on the charts, because this is what human beings are looking at. Of course, they're looking at data metrics or, on-chain metrics in relation to Bitcoin, but they're also just looking at the charts. They want to see just human beings, they like repetition, right? It gives them a sense of control when they see symmetry on the charts and they see repetition and consistencies, right? So even if it's subconsciously, many people are just like, man, they're waiting for this area. And it's almost like the markets learn patience through this game of symmetry on these charts. And you can see how patience is really taught to these markets, because I did this video talking about this area at $48,000 at the end of December, and now we're in May of 2022, and we're still not even there yet, and we might not even get there. This is just a scenario that we should just be very mindful of to the downside. To give you an idea, the 618 is only 17% away. The 200 moving average is 38% away, and the 786, 50% away. I don't think we're going to reach the 786 as we did the previous two cycles, but I think that 200 week moving average is 100% in play. And maybe it could be an environment where Bitcoin's capitulating to that area, bouncing off. Maybe it capitulates below the area and does bounce off the 786. Maybe this data doesn't happen. Maybe Bitcoin diverges from previous cycles and cycle lows. But at the end of the day, none of us know. And that's why this isn't a prediction. This isn't financial advice. But this is just simply an illustration of how consistent Bitcoin cycles have been on the charts and why we should take that data and we really should just run with it. We've been really cautious, especially in just this year, 2022. I've been very cautious in regards to Bitcoin charts, Cardano charts, whatever we're tracking, because of what we're looking at on these charts, right? The concept of just breaking bull market doors as we did That was back here in November. We were breaking these bull market doors back here. That's another Fibonacci, kind of an inverse Fibonacci. We broke the bull market doors. We were really bullish on this channel, right? But we had to kind of change tone as we started kind of getting further past halving, and the cycle started to give us new data. And here we are. We're very cautious. We're macro bullish. At least I am. I don't know about you, but let's see what happens with these markets. But at the end of the day, all of this to be said, I think the bottom is getting close, and it could still be months away. But look at what we've endured to get there. All of this, the sideways, the guessing, all of that, over a year of data, over a year of watching these markets come to this point of potential capitulation. We're getting very close. And I'm just saying, be prepared, and be prepared optimistically, because there's opportunity here. There's way more opportunity where Bitcoin is right now, or where it potentially might go, than there was here. That's just the bottom line. Be optimistic about that. I think it's a good thing. So let's see what happens. We're going to track it. Let me know your thoughts in the comments below. I appreciate each and every one of you. Have an awesome day. God bless.